Hi there, welcome to Markets Tomorrow right here on ED and the Mumbai News Centre. I'm Tanveer Gill. Let's start off with the top stories that came in from the markets desk this afternoon. Strong start with volatile end for the markets. Nifty manages to close at around the 8,700 mark amidst last hour volatility. Broader markets more by way of selling pressure, end the day underperforming the benchmark. The big deal in the cement space that will impact Orient Cement, the stock, when we open trade tomorrow. Orient Cement acquires 74% stake in Billai Cement joint venture with from Jayaprakash Associates for a total value of nearly 1,500 crores. ED Now, of course, first reported this story yesterday at 6 p.m. Yes Bank, another ED Now exclusive, looks to raise $500 million after the QIP fiasco. This is of course coming on the back that the QIP did not find much favor with foreign investors. Company in talks with Gulf-based funds, sovereign wealth funds as well. Private placement deal may be sealed by December end. Then there was of course a tearaway rally that was witnessed in oil and gas shares. The likes of Reliance Industries, ONGC and IOC surged in the session anywhere between 2 to 6% apiece as Asian GRMs hit an 8-month high. Scrumptious gains were seen in Jubilant Foodworks in the session today. The food chain peer Yum Brands, which owns and operates the Pizza Hut and KFC chain of restaurants, posted a strong positive system sales growth after several quarters of degrowth in India, and that dropped off in sentiment. Jubilant Foodworks closed 2% higher in the session. Aurobindo was another stock in focus, staged a relief rally after Intas Pharma trumped the drug maker to buy Teva's European assets for $800 million. Brokerages pretty much stated out that acquisition would have been a big overhang for Aurobindo Pharma, so good they walked away from it. They have retained the stock as the top bet in the pharma space from a near-term perspective. And then there was Jindal Steel, which really under selling pressure after defaults on interest payments to bondholders, underscoring the debt-laden company's woe only extended themselves out. The Naveen Jindal-led firm attributes short-term cash flow mismatches behind the non-payment. Okay, voices lined up on the show and we'll make sense of the markets with them. We have Sandeep Dhingra of Ashiana Capital from Singapore, Dipan Mehta, member BSE NSE, joining us with a fundamental view on the markets, and Sameer Chavan of Angel Broking will help dissect the strategies which can help viewers make money in tomorrow's trading day. The question that we are asking is, will the markets continue to remain choppy amidst the earnings season, which is likely to hit a start next week? Will it really be sideways trade with the market seeking direction with subdued sentiment across the globe too? Sameer as well as Dipan, good evening to both of you. Dipan, I'll start off with you. Do you think that the best bet right now is to stay in cash because the market is not going to give us too much by way of an upside move, and downside also doesn't seem like there is any trigger that could make the market a whole lot nervous from here?
So it depends upon the cash level at investors and if investor is sitting on cash, then maybe it's advisable to just wait for a correction and then look at increasing exposure. But if more or less one is fully invested, then one can just remain invested and not liquidate at these levels, especially if the investor is a long-term one. Because although corrections are expected, I think they will be short, and the recovery also will be quite fast, not giving an opportunity to get into stock. So it's a bit of a confusing picture for investors at this point of time, considering that markets have rallied significantly, valuations are on the high side, but then the money flow, the liquidity flow continues to remain strong, and that is an important factor to consider. So from our point of view, I think the best way to play this market is to just wait and watch. We have an earnings season coming up, and that could provide new ideas, new opportunities, and one could look at those with a fresh mind.
Okay, Sameer, your own sense on the index close and what it would mean for trade in the coming few sessions?
See, we have been maintaining our cautious stance on the market since last 2 to 3 weeks. After 2 days of consolidation, Nifty faced a strong resistance around 8800. So that has become a very major hurdle for next at least 3 to 4 trading sessions. We have been maintaining our negative stance on the market, and we have already created shorts somewhere around 8660, 8780 2 days back, and we hold our view that 8825 has become a very strong resistance. So as long as Nifty remains below 8825 on a closing basis, we would see selling pressure coming in at higher levels, and probably next 3 to 4 trading sessions we expect Nifty to retest its last week's low of 8580, 8600. So as of now we see Nifty moving in a range of 8825 to 8580, 8600 on the lower side.
Okay, and drilling it down to specific names, and we'll talk about that as we go along in the show as well. The oil rally, which is leading to oil stocks seeing more favor from investors. Dipin, how do you map that move? Is it short term, or do you think that the change in oil fundamentals, with the new normal on oil shifting to $50–55 to a barrel, would make it compelling to buy these stocks? Reliance Industries, ONGC were pretty active in the session today.
And rightly so, because when oil prices go up, companies like Reliance can benefit from inventory gains, and GRMs also tend to improve, and especially ONGC the direct benefit, because it will get higher for every barrel of output that it generates. But then these are cyclical businesses, commodity businesses, and while the going is good, you will see a huge upswing in their profits. But the oil price also can reverse, and at that point of time again the profits in turn also will decline accordingly. As such, for ONGC not much volume growth is expected, although for Reliance major capex plans are going on stream, so that could drive the profit growth going forward. But then there is the uncertainty of the telecom venture. So on the whole, I think oil marketing companies, Reliance, ONGC, upstream oil companies included, all offer a good trading bet. They have been underperformers, and now I think a trigger has come for their rally, and maybe they have another 5–10% to move up from these levels. But the question which a long-term investor would ask is, are these secular growth stories? And the answer to that is no. So while they are good trading bets, I'm not sure that they'll offer good returns, say 2–3 years or even 12 months down the line.
Pranay joins in to put the rally in oil and gas stocks in perspective for the benefit of our viewers. Pranay?
Well, Tanveer, it was the only sector holding up in the green today, and as our guest was pointing out, it's been an under-owned space relatively. While we've seen that autos, chemicals, and such private financials, these are the kind of spaces which have been in vogue. This is one where we have seen only selective favoritism, but of late we've seen good buying in these counters, which extended even in today's session. So you had the OMCs, which led with gains of about 3–5%, and even Reliance was helping with the leadership. Besides that, you had the gas companies, and we've seen all the brokerage reports coming out saying that how bullish they are on the city gas distribution and the volumes, that we are set for a secular story, at least over there, with the prices coming down, and hence also for the beneficiaries. And now brokerages have also started giving a thumbs up to stocks such as Petronet LNG, ONGC, Oil India, which were amongst the lesser favorites right now. So these are the ones which are moving up in trade, but it's mostly a trading rally that we are seeing. And after a strong solid run that we've seen, most likely you are going to see some kind of consolidation even here.
That seems to be the case. Samit, your own sense on the charts for ONGC and Reliance in particular?
See, if you look at the monthly chart of Reliance, we have seen a long consolidation of nearly 6 to 7 years within a very narrow range. Last month, the stock confirmed a breakout from this long 6 years consolidation on a closing basis. Thus, any dip probably towards 1070, 1050 is likely to get bought into. We won't be surprised to see the Reliance heading towards 1200, 1220 over the next few months. At least for next few weeks, any dip or any consolidation within a range of say 1120 to 1070, 1050 would be a very good buying opportunity for Reliance. 1000 to 1020 now holds as a very strong support, and on the higher side, as I said, 1200 1250 levels are quite possible, at least in next 3 to 4 months. As far as ONGC is concerned, we have seen a decent rally in the stock in last couple of months. The stock is now heading towards its medium term resistance zone of 280. It's a matter of time the stock is likely to surpass this level, but before this happening, we would see some consolidation in ONGC, probably in a range of 280 to 240. So after reaching 280, if we see any minor profit booking, this stock is likely to take a support around 250 240 mark. So that could be a very good buying opportunity if one has a medium to long term perspective.
All right, that pretty much rests the case where the oil and gas rally was concerned in the market today. A big deal happened in the cement sector. Orient Cement bought out the 74% stake of Prakash Associates in the Bhilai Cement joint venture for a value of nearly 1500 crores. In addition to that, I think they also acquired, they did in fact also acquire Nigri Cement, a grinding unit of JP Power Ventures for 500 crores. Before anything else, let's hear out a soundbite from Mr. Deepak Khetrapal, MD and CEO of Orient Cement, on why this acquisition was done and what does it do to their own total capacity.
The intent has been confirmed from by both the boards. It will be funded as a mixture of debt, equity and internal accruals. All the details will work out in the next week or so. Largely we want to stay well within our prudent norms of debt equity. That means as a group we typically do want to work within 1.5, 1.6 debt equity ratio. So if the debt has to be brought in, we don't want to allow the debt equity to go beyond, let's say, 1.6 or thereabouts. So whatever then is required to be brought in as equity, we will bring in.
Dipin, you want to comment on that? I think the acquisition has happened at 100, 110 per ton level. Do you think that pretty much makes the acquisition a steal?
Yeah, I think that consolidation continues in the cement industry, and this particular acquisition is reasonable compared to earlier ones. So my sense is that it is great for the acquiring company as well as the industry as a whole. We have seen the last few years cement companies have come out with stellar set of numbers. They've been able to pass on price increases. Volume growth also has been stable. They have been disciplined as far as output is concerned, and all these are being reflected in the performance of the company, their operating profit margins, as well as the valuation which the stock market is giving to the cement companies per se. And my sense is that going forward with improvement in demand because of festive season which is upcoming, as well as overall improvement in the economic trend, I think the volume for cement will certainly look up, and these are stocks which investors could certainly look at remaining invested or buying at corrections.
Okay, gentlemen, we'll head into a short break right now. As we do so, hear out Sandeep Dhingra and his view on the market. When we come back, we'll focus on tomorrow's trading day.
Most of us believe the India story, and the rate cycle is favorable, consumption's picking up. So all the good things apart, the risk seems to have increased a little bit more. Preferred stock has been Indian Oil for last several months, and I think as the market realizes more and more that there's a large part of this businesses which are, consumer oriented, which is the marketing side, the valuations improve. Plus, I think what has been underappreciated for several months has been that the balance sheet improvement that these companies are seeing is very, very significant. So, you have, rapidly improving balance sheets, you have a steady state consumer business, and, refining, which went through a little bit of a choppy patch, looking a little better. So I think this sector still looks very good to us. We've been great fans of NBFCs. We've been active in a lot of names. We've taken profits on a lot of names because they've done so well. Valuations are, obviously we prefer it to be more attractive, but it's a space you have to stay invested in. I think you have to keep, from our perspective, you have to keep, keep a mix of NBFCs, and we keep moving between a few names depending on where relative valuations are moved. But it's probably the most attractive space you have to be in.
Welcome back. You're still watching Markets Tomorrow right here on ET Now. I just want to mark some of the stocks that will be in focus in tomorrow's session. Orient Cement for sure in reaction of that acquisition. Jayaprakash Associates, the stock is trading at about 11. It's already recovered a lot of ground from a level of $5. That's where the move started. But remains to be seen whether all this deleveraging exercise that the management is undertaking, bringing down the debt on their balance sheets, would actually change the perception the market has. It's known as a penny stock now. It was an erstwhile index stock at one point in time. The fortunes have changed completely. Orient Cement, I think the call is fairly bullish. It's in the right space, and individually the company is doing right things. They're sort of diversifying and widening their geographical focus. Do you think that while the fortunes have just dwindled away, that the management through this deleveraging exercise can bring life back into the business? Is it too early to say so?
No, frankly, no comment. I think JP Associates have just fallen off the radar of many analysts, including us. So best not to speak about the company. I think this is the time to improve the quality of the portfolio and certainly not chase penny stocks or stocks on companies which are under distress. So that's what the strategy of the investor should be.
And Orient Cement just fits in with that strategy very well. If you're looking at a value play in the market, then within the cement basket, Orient Cement stands out.
Yeah, of course. I think as I said, the view on the cement companies is quite positive. But the top pick in the sector would be Shree Cement, with usual disclosure that we and our clients are invested in it, and that's on account of the way they go about increasing their capacity, low cost of production, low cost of setting up the capacity, and being in the right markets, growing the volumes, and extremely strong balance sheet. So, given all these aspects as well as organic strategy to grow the business, makes Shree Cement the top pick within the cement sector.
Okay, very quickly, a couple of more names I wanted to highlight, and if you have a view on these stocks is also a target price. NMDC hiking prices across their product categories, and the view in the street is also very bullish, given their dominance in the mining space. There's Goodyear, where Goldman Sachs has bought about 1.2 lakh shares at a price of 780 rupees per share. Tire stocks either ways have been outperforming. And then Aurobindo Pharma, we're walking away from Teva's European assets. That played in quite well with the stock's performance. Any three of these names where you're bullish?
Yeah, Aurobindo, I think again, we and our clients are investors in measure of disclosure, and we are very positive on the company going forward. One of the top picks within the pharma sector, and the reason for that is that the number of applications which they have made and the approvals which they have got. I think US business amongst all the pharma companies, large cap one, seems to be the most secure and at least for the next 2-3 years the fastest growing as well. And apart from that, I think European acquisitions also now turning positive, EPS accretive, as well as improving the ROI and the ROC of the company. So that's also going to be a growth trigger going forward. And we do feel that at least for next 2-3 years or so, Aurobindo can deliver that typical 15 to 25% type of top line bottom line growth from its present business, that is the organic businesses which it has. And any acquisitions would be that would only enhance the growth going forward. So my sense is that Aurobindo could be another top core holdings of an investor, and certainly look forward to great returns and good numbers also for this quarter. The other company, the Goodyear India, I think as you said rightly, the tire industries have been doing well. Again, tire prices have come off, and overall transportation in India is picking up, which means replacement demand is picking up. OEM demand also is picking up from two-wheelers, four-wheelers, tractors, as well as passenger and commercial vehicles. So these are good times for tire companies. But again, these companies are in a business which is intensely competitive, and while they are gaining some advantage because of lower raw material costs, eventually these are not businesses which can typically keep their margins and grow their volumes. So I would be a bit skeptical on the prospects, long-term prospects at least, of the tire companies. But even within that space, I think one company which stands out is Balakrishna Industries, and that came out with very good set of numbers, and for the first time after several quarters the company was sounding very optimistic about demand for its products in Europe as well as US. By the way, this company manufactures off-the-road tires, and it's kind of a niche business, so we're very optimistic and positive on that company. Again, a disclosure that we and our clients are invested in it. The third company I think which you mentioned was?
Quick comment there, just in 15 seconds, Nipun, could
Get the name?
NMDC.
Oh yeah, I think it's certainly a trading pick because of the way they've been able to raise their prices, and generally optimistic at least on the short term for the company.
Samit, strategies for tomorrow? Incidentally, you have a buy on NMDC?
Yes, we have seen a decent recovery in last 4-5 days, and this stock is now on the verge of giving a breakout considering the volume activity that has happened during today's session. So we expect an immediate target of 124 in NMDC. Stop loss would be around 111. Second call would be a sell call in Can Bank for a target of 315, and stop loss would be around 339.
Okay, gentlemen, thanks very much for joining us, Dipin as well as Samit, with your market perspective and help take our viewers through trade today. Also indicate what the trend would look like for the near term as well as the medium and long term. Appreciate your views as always. That's time out on Markets Tomorrow, but we'll catch you with the markets as always tomorrow morning at 8 a.m.